Right now, you can buy a piece of a giant company in under a second from your couch in your underwear. But 400 years ago, that same trade needed a wooden ship, a 2-year voyage, and sometimes a small war. So how did we get from trading cows to trading at the speed of light? Let's follow the evolution of the trade.
It all starts with a problem. Barter. You've got a cow and you want an axe. Simple, right? Except the guy with the axe doesn't want a cow. He wants a goat. So now you have to go find a goat guy who actually wants a cow, and yeah. Economists call this the double coincidence of wants. Normal people call it a nightmare. Trade needed an upgrade.
Enter money. At first, people just used stuff everyone wanted. Salt, grain, shells, cattle. But salt melts, cattle die, and shells, well, they're not exactly rare. Then, around 600 BC, a kingdom called Lydia nailed it. Coins, little stamped lumps of gold and silver, all identical, easy to carry, impossible to argue with. Suddenly, you didn't need the goat guy, you just needed coins. Trade had its first killer app. Now fast forward to 1602. A Dutch company wants to sail across the world for spices, but it's wildly expensive and it might not come back. So they try something crazy. They sell shares, tiny slices of the company, to anyone with cash. If the ships come home loaded, you get a cut. If they sink, oof. This was the Dutch East India Company, and it created the world's very first stock exchange in Amsterdam. For the first time ever, a regular person could own a piece of a business they would never even see.
The idea crossed the ocean. 1792, New York. 24 brokers meet under a buttonwood tree on a little street called Wall Street. They sign a one-page deal. We'll only trade with each other, and we'll all charge the same fee. That handshake under a tree grew into the New York Stock Exchange, the most powerful market on the planet.
But there was still one huge problem: speed. If a price changed in New York, a trader in Boston found out days later. Then came the telegraph, and in 1867, the stock ticker. Now prices raced down a wire and printed onto paper tape, almost in real time. That's why stocks have those little ticker symbols. And all that leftover paper? People threw it out the windows to celebrate the original ticker tape parade.
For the next 100 years, trading had a sound. Hundreds of humans crammed into one room, screaming and waving their arms. It was called open outcry, and it looked like total chaos, because honestly, it kind of was. Buy, sell. Every single trade was one person yelling at another person. Loud, sweaty, and somehow it actually worked. Then in 1971, everything flipped. A new market called NASDAQ became the world's first electronic stock market. No trading floor, no shouting, just screens. And once computers were in charge, they got fast, really fast. Today, algorithms trade in microseconds, millionths of a second, and they make up more than half of all trading. The catch? Sometimes they panic. On May 6, 2010, algorithms started dumping and buying from each other in a loop, and in a matter of minutes, nearly $1 trillion just vanished, then came back. They call it the flash crash, and nobody fully saw it coming.
Meanwhile, trading escaped Wall Street completely and landed in your pocket. In 2015, an app called Robinhood made trading free and made it feel like a game. Then in 2021, it got real. A crowd of regular people online noticed hedge funds betting against GameStop, so they all bought it, together. The stock exploded over 1,600%. Hedge funds lost billions, and for one wild week, the little guys broke Wall Street. Then the app hit pause and things got messy.
So here's where we've landed. From a cow, to a coin, to a share, to a scream, to a scream, to a swipe. Every single step made trading faster and open to more people. But look closer, and there's a pattern. The faster and easier it got, the further it drifted from the real thing being traded. And the next trader, it might not even be human. AI bots now trade crypto 24/7, and they're starting to make their own calls. The evolution isn't over, so the only question left is, when the machines are doing all the trading, what exactly are we? If you want to actually understand the money world, subscribe. This is Proofbench, where we follow the money.